What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 7th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a lot of different things to discuss, from taking a look at the continued strength in Bitcoin's price as we approach the halving event, and along with that as well, talking about the broader macro environment in regard to equity markets and global economic performance. And last but not least, I want to talk about a recent stock trade that I recently made for a long-term swing trade. And we're going to be diving into the details of that as we go throughout the video. But I do want to mention as well, towards the end of the video, we have a sponsored interview with Dan from Morpheus Network. So I highly recommend you stay tuned for that. There's a lot of exciting news with that project that we've been covering for quite some time here on the channel. That being said, though, let's go ahead and start by taking a look across the board for cryptocurrency markets. So taking a look over the last 24 hours here, we can see the vast majority of cryptocurrencies are in negative territory here, slightly down below 2%. However, we still have some players here holding up the market. Valuations have not dropped that significantly. We're still holding up at 254 billion. Bitcoin making up the bulk of these gains as not only the largest player in the market, but also maintaining relatively green price action consistently over the last few days, and breaking out of the wedge that we talked about in price. So I'm going to go ahead, we'll first talk about a few things here in the short term, and we'll slowly start expanding our time horizons. And the reason I want to kind of do that is not only show in the case of the short term that price is doing pretty well in the sense the day-to-day performance, but really talk about how this price action that we've seen is really shaping up the weekly and the monthly charts, which are, as you probably know, guys, for those of you who are fans of the channel, my favorite time frames, because I'm a long-term swing trader. I like trading the cycles of Bitcoin rather than trying to trade the day-to-day. It's too much noise, right? But I want to go ahead, we'll just take a look real quick for those of you who care. Now, I'm going to go ahead and turn off my drawings here. But you can see here, as many of you might know, I have it drawn on my Coinbase chart, so I'll just go ahead and show it so you guys can see it. As you can see on the daily here, drawing, we'd had a wedge drawn here from the last couple of days. Taking it here to the hourly becomes a little more clear here. We took in the lows that were rising, the declining line of resistance here, the declining highs. And we could see here that we had a failed breakout here, but eventually crawled back up, came down, made contact here on the hourly, and started to move upwards here. So we've gone from about $8,900 up to around $9,300 at the moment, with a peak around $9,400. So still capping out around this range of resistance. Again, this has been our general kind of target range here. Now, I'm not going to say here that I have any doubts that this could keep going, but this is generally where, again, we talked about, if anything, taking some profits here as we prepare for the halving event, right? You know, again, this is some of the precursor rally that we saw here. But I will say here, looking at this price and breaking out of the wedge, because I have no doubt this could come up to test a big even like 10,000, that this could just keep charging forward. And again, I want to keep open to the idea, as I have drawn here on my Bitstamp chart, that this could possibly not only come up here to the line of resistance, but could possibly break out and start to make this support, right? So what we could see as we start to step here to the weekly is that prices could break out here. We could get out of this very long-term wedge, have a kind of early breakout here, but start to come down and test this line of support in order to set up for the longer-term cycle going into 2020 and 2021. Who knows, right? We're really going to have to see what happens here. All I can say that I'm quite happy about is that we were very confident that this would rally into the halving event, that this has basically gone up exactly as planned in regards to our target range as we've entered into the green bars here. And as we're just 4 days away from the halving event, price is doing pretty much exactly what we've wanted to see here. And that's something that I'm really happy to see in regards to markets. Now, I want to talk about a few key things here. We not only want to talk about the weekly, right? But we also want to take a look at the monthly. If we go ahead, take off our drawings here. Actually, I want to take a look at BLX for this. This was the chart that would really showcase what I want to discuss. Take a look at where we've come from over the last month and a half. We were down here around 3,000 to 4,000 for Bitcoin. We've not only more than doubled in price, but look at that bounce off the logarithmic line of support. And now it looks like we're going to start basically cupping up here from all of the highs back here, the relative highs back in June of 2019. We pulled back, and now it looks like we're starting to move upwards to retest that range at 14K, and then we're going to spark a rally back above 20K and really kick off into the next cycle. And again, talking about the expanding cycles here, we've got the time to make up for it, right? We're adding a year with each of these cycles, at least historically speaking, about anywhere from 11 to 13 months. So averaging around 12 months. In this case, we have to be patient and understand that our target is likely for something in the later part of November, December of 2022. That's my general target range. And I have a much more conservative estimate for price, which is around 100K. Now, I'm keeping open to the idea that we could go much further. As we all know, many people expected 10,000 the last cycle. We end up going to 20,000, double the valuation. So I'm keeping open that we could go to 150K, 200K, 250K, whatever you guys might believe yourselves as price targets is a possibility at the end of the day. But for now, again, we're going to be cautious, keep our estimations conservative, and see how things play out in the cycle. But taking a look at the stock to flow model, again, a lot of people saying that Bitcoin is overbought into the halving event. It's not really that overbought, guys. So the only thing here about this chart here that's kind of weird is that it's already registered that the halving has happened. And don't worry, it hasn't. But basically, price is just hovering a little bit above here. It was actually much more expensive back here, of course, back in February when it was around $10,200. And if we take a look here, and we're going to go ahead and reset the chart, you can see before the halving event, we had a much higher level above the price, right? Again, so just keeping in mind here. Now, generally speaking, actually, if you get it much more close to the actual halving event, it's over here. But again, you can see that there are these parts and times where price can be much higher. It can be much lower as it was just back in March. We're generally speaking, if you take a look at the longer term view, and you can also see really the price to model in this case, we're basically exactly where we should be. Funny how markets do that. They eventually start to correct themselves when people start to account for the halving model to a degree. A lot of people say this is hype buying into the halving event. I would say more than anything, it's value investors coming in this case and seeing that Bitcoin was pretty dramatically undervalued already to the current fundamental value of the stock to flow model for multiple months. And that's why slowly but surely you started to set higher lows and higher highs. And now we're back above here as people are a little bit excited, people are hyped into the halving event, and they're starting to adjust for some of this increase in fundamental value in the stock to flow model due to the fact that there's going to be a cut in supply, which is going to leave a massive shock to the supply and demand, the current equation for supply and demand for Bitcoin. So anyways, we've talked a lot about that. We've got it coming up here in about 4-5 days, give or take here, depending on how you want to call that. But I'm really excited to talk about this, guys, because this shock from 12.5 Bitcoin to 6.25 Bitcoin per every 10 minutes is going to be massive. The ramifications for Bitcoin are going to be huge. And whether price goes up or down in the next coming days when it happens, I want to be there to watch it with you guys. I want to be there to have fun and talk about it and share our thoughts, watch it real time. I think it's going to be a very historic moment. We only get these every 4 years. So really, really excited to cover it with you guys. And again, as we've talked about before, what an interesting time for this to be happening. The halving event happening in this macro environment is almost a gift, right? I mean, it's a very exciting kind of combination here. Now, I'm not excited about what's going on in the macro environment. I'm not happy to see the economy going through what it's going through. I'm not happy to see COVID-19 still being present. But I want to go ahead and talk a little bit about some of the lasting and lagging effects that are going to come from all of the shutdown that we've had, all of the kind of destruction and, terrible things that have come out of COVID in this case, and how it's going to weigh down on the economy. Broadly speaking, the world economy, we plummeted 4.8% in April. This is the current Bloomberg Gdp Tracker. It takes in global GDP. Very similar to what we saw back here in 2008. And I have no doubt that we will see a reflection here coming down very close to these levels, if not worse, or what we're likely going to see comparative to the kind of V-shaped recovery from 2008, what we're likely going to see here is that even though we're going to get probably a initial rebound, we're going to probably sink a little bit lower and really stagnate in the sense of GDP. And that's going to have a waning effect here. And again, this plays into what we've talked about before, this idea that global GDP is going to remain relatively low because consumer confidence, or what I would probably call at the end of the day, the long-term psychological mentality from the economic shutdown, is going to keep a lot of people from taking an optimistic tone to making high bet risks in the economy for a very long period of time. Think about all the restaurant owners. Think about all of the business owners in various industries who've talked about permanently shutting down. We talked about this with restaurants. We've also discussed as well, some of the major companies going bankrupt just this past week. J. Crew just went bankrupt in the United States, a very nice high-end luxury retailer. There's a lot of other retailers on the brink of the same exact position. Nordstrom shutting down a mass amount of its stores. So you have physical retail going into the crapper, to put it lightly. And again, that's just one of many industries, right? The only thing that's doing well right now are companies like Amazon that are probably doing more sales than they've ever done in history. But this isn't just in the United States. I don't want to get caught in the kind of U.S. limbo of me talking about what's, kind of my modern reality. For those in other global markets, you're likely feeling the same pain as well. We're all in this together. I mean, not in a good way, sadly. But the Bank of England says that their stimulus package that they're working on is going to be likely coming in June. As the UK economy craters. So we've been seeing the UK get hit very hard here. I think the numbers here, I have them highlighted. They were expected to see the economy shrink 14%. And one of the major heads here, the Governor Andrew Bailey, has pledged to act as necessary, suggesting bond buying could basically go to infinite levels. They will do whatever it takes to continue stimulating not only government spending, but also any form of economic stimulus. They will do anything in their power without limits. So we've now heard the Federal Reserve, from a variety of Fed governors, and also Jay Powell himself, say that we are going to provide infinite liquidity. We've heard the Bank of Japan repeat that in a similar nature, it's going to provide infinite liquidity through practically an infinite bond buying program and continuing to buy ETFs and shares in the Japanese markets to support the Nikkei. And now we had the Bank of England doing the same thing, following in suit as well to the comments from the ECB. So this really is unprecedented, guys. We're going through a time where central banks are openly stating that there are no limits. They are going to print and print until they depreciate your purchasing power and your dollars as much as possible in order to support artificial asset markets. That's their priority. Because quite frankly, at the end of the day, if they were to be printing all this money and I started to see every week about $2,000 or $3,000 arriving in my bank account, I could possibly see the idea of them exploring this, because if everyone's getting cash like that, and the argument of something like a universal basic income, it might mean that at least, hey, I'm getting some of that new inflated money, right? So I'm maybe able to maintain my purchasing power, and that's money I can go spend on goods and services and stimulate the economy. But that's not what the Fed's doing. They're also not making it easier for loans to get accessed by everyday people, because quite frankly, they've given that up to the banks, the commercial banks. And they've made the piss poor argument, apologies for my language, but it is piss poor, that they're printing a ton of money and saying that it's for stimulating the economy, stimulating loan growth, when in reality, banks right now are doing the counter opposite and raising their standards for mortgages, raising their standards for a variety of loans. I mean, this is just unreal, right? When you have banks basically doing the counter opposite of what the Fed is claiming that they're trying to do, in this case is to get standards down on one of the most expensive costs for people, which is your living expenses. I can tell you all that in the next coming weeks and months, you are going to start getting some data in regards to the housing market, and it is going to be brutal. Prices are not going to fare well because people can't get these mortgages that they want to get, and along with that as well, you've also got, in combination, a terrible economic catastrophe, the likes of which we haven't seen, I think, even before 2008, all the way since the Great Depression. I, again, stand by my statement. As much as the Fed and central banks will print money, even though equity valuations might go to all-time highs, we are in a depression. This is the biggest sense of a twilight zone that we've ever seen between asset markets and the real-world economy. We're back above dot-com highs in the sense of corporate valuations, in this case for equities, versus real-world GDP, as we talked about the other day. Now, the same story here is not happening in emerging markets, because emerging markets don't have the strong kind of world currencies that we have in Western markets, from the dollar to the euro to the Japanese yen and to the Chinese yuan, right? And also Canadian and Australian dollar, right? We can bundle those in there as well. But in the sense of emerging markets, they're on the opposite tail end. They are in need of these dollars, these euros, these currencies that the world utilizes. Maybe not just ourselves here in the United States, but also a lot of people in these emerging markets need in order to buy goods and services, exchange, for goods and services. And we can see here in the performance, if we take a look here at the emerging markets have been on a decline since back here in January of 2018, setting a higher low here in January right before the sell-off. And we went back to test down to our lows back here in 2016, which was when we had the previous commodity crisis. So you've got a lot of things that are weighing down these markets. You've got a massive commodity crisis where basically oil and natural gas are near all-time lows. Not to mention you have to adjust for inflation, but we were seeing negative prices the other day. The second thing as well that you have to worry about for emerging markets is the sheer lack of dollar liquidity, which is freezing global markets outside of developed economies because all these people are cash tight for dollars. This has been the case already in emerging markets for a very long period of time in Argentina, as well as Venezuela and other areas like Turkey, but now it's starting to have a contagion effect. And you're going to start seeing this reflect in the valuation and the currency pairs between the dollar and many other foreign currencies. It's going to get worse over time, guys. I hate to say it. And I think that, again, we're seeing here on the emerging markets ETF that we're hitting some resistance like we did back here in April of 2016, and that this is going to likely start rolling over. And I don't feel we're going to get this support like we did last time. I don't see it happening. I see emerging markets being in a very rough position for a very long period of time. And eventually, that's going to be, again, one of the major factors that weighs down the broader markets here, even the developed economies that are immune to a lot of these problems. Now, last thing I want to talk about here, you guys have probably waited patiently if this is what you were interested in. I want to talk a little bit about the one stock position that I recently made that I'm actually going to be holding likely for a long-term swing trade, probably over the course of a couple of months. So what is that trade? Well, I have finally made it clear, and I want to make it very clear here, that I believe whether this is going to be a long-term cycle shift, meaning that like we go into a bull market for the next year or two, or that simply because of central bank monetary policy and the sector having a massive sell-off, that cannabis markets are making a comeback. Now, the stock I picked today is Tilray. Now, fundamentally, I don't really care too much about Tilray. I think most cannabis companies don't have, fundamentals or the hoot, right? I wouldn't hold any of these things for a long-term trade. But I will say that I'm going to try to refrain from saying at the end of the day. Currently at the moment, Tilray has been not only one of the most oversold here, but they've also been one of the better performing ones in the past. And it's a big momentum play. Now, you can see here on the standard chart here, right, this has not only had a massive sell-off, it's well below the opening price of the IPO. But you take a look at the logarithmic chart, it becomes very clear here that we have not had a rebound like this and a solidification of higher price levels ever in Tilray's price. And this goes for the broader cannabis sector. I'll jump back here to Tilray, but I want to go ahead and just take a look at MJ, which is one of the broader ETFs here. We have not, since this entire downturn as we went into a bear market for cannabis, we have not had this kind of rebound across the board. And what I like here is that we're looking at the weekly chart, consistent higher lows on the weekly, and what looks like basically a ascending wedge here, an ascending triangle, or basically a flag in price. So you could really be picky about what you want to call it. But again, price generally holding up here around $12 here on the ETF, setting higher lows and looking like it wants a breakout. Not to mention, if you take a look at Tilray, what I love is the volume that came in. All right, we'll take off the logarithmic chart. Again, you can see the candles behind here. We went from trading around 16 million shares per week up to 169 million. This is what I want to see. I love this kind of price action in tandem with the volume. And what I'm looking for here, if we take a look at the daily here, I entered in around 744 on Tilray. I'm basically looking for the higher lows to continue, but eventually for us to kind of push up here, break above this area, and continue upward and test a higher level here. My general target range, as I've indicated here on the chart here, is for somewhere, I think around, something where it'd be double of the price here. So something around $15 upward towards 24. All right. Again, we're going to have to see how this plays. I would say 15 to 25 in this case, I think was our general target range. So who knows, right? This is general resistance range back here for a long time, around $25. I think we could easily see this move up this much because we already saw it go up from $2.47 up to $7.41. Now, some people would say, Nick, you're paying a crazy premium there. And it's like, yeah, well, this is back during the crazy pullback here. And for Tilray, what stopped it, take a look at the weekly back here, what stopped it from in a couple of weeks going from $22 a share all the way up to $300 a share? Nothing. Because fundamentals don't matter in equity markets. Fundamentals, at the end of the day, don't really matter in most markets. Especially when there's irrationality, when there's emotions dominating the market, and people are simply trading on pure speculation. So, anyways, I'd love to hear what you all think about this. Again, it's not financial advice. I can't give you guys direct advice on what to buy. I just wanted to share with you all what I'm currently positioning myself in. And I'm starting to build up my equity portfolio. I'm really excited about it. I think that there are some plays that you want to get diversified exposure to. I can't determine what those are going to be for you. You're going to have to make those decisions for yourself. But the best I can do here is just showcase to you guys what I'm currently interested in and where I'm making moves in the market. But again, major position still is in cryptocurrency markets, not only a diversified play between Bitcoin as well as altcoins, but outside of that, taking a look at equities, commodities, really specifically gold and silver outside of my crypto positions, and then dabbling into equities. So hope you all are having a fantastic day wherever you are, and let's go ahead and dive into this very interesting conversation with Dan from Morpheus Network. Alrighty, everyone. So today's sponsored interview, I'm sitting down with my good friend Dan Weinberger, who is one of the heads over at Morpheus Network, one of the successful projects out there in the cryptocurrency space that's pushing for supply chain logistics on chain. So Dan, thank you for making the time, man. It's a pleasure, and I'm excited to hear about some of the things you guys have been working on since we last talked.
Awesome, Nick. I'm excited to be here as well and speak to you about it and speak to everyone who's watching.
Absolutely, man. So I think the one thing that I think is most exciting in regards to some of the recent news, and I want to give you some time to kind of talk about it because I think we've been killing to see some of the enterprise use case for some of these systems like Morpheus Network that have been built. And one of the things that I was really excited about reading in regard to your recent customer line that you guys have built is Federated Co-op, which is one of the larger consumer-based stores in Canada, and along with that as well, Vitalcan, which is, from my understanding, kind of like a pet shop in this case for Latin America. So do you want to spend some time maybe to dive a little bit in regards to those different partnerships?
Yeah, I'd love to, Nick. Obviously, we're excited about both of those, clients of ours. It's great working with them and expanding our technology, implementing these amazing systems as well. As you mentioned with FCL or Federated Co-op, they are one of the largest retail stores in Canada. They're one of the 50 largest companies in the entire country, actually. To get a sense of how large they are, they employ over 23,000 employees. So they have quite the army of people working for Co-op. They actually supply food to over 2,000 retail locations as well. And they deal with a lot more than food supply as well. They deal with pharmaceuticals, oil and gas. They even have their own refineries. So they are absolutely massive. They do approximately $10 billion of revenue annually. And what we're handling for them right now is their documents specifically for their food suppliers. Obviously, suppliers have to follow their the proper certifications, whether they're sending Federated Co-op asparagus or leafy green vegetables or whatever it is. They have to have the proper certs behind it. And it sounds quite simple. Obviously, you can't just stick stuff on the shelves in Canada without having certifications. But a company like Federated Co-op needed a solution to handle these certifications. They can pull them up whenever they needed to and make sure they're up to date as well. And we came in at the right time. Obviously, we're very excited that not only did we put a proposal out there quickly to them, had the solution ready to be implemented, but we've actually implemented the solution, and they actually have their suppliers up and live on the platform right now.
That's awesome, Dan. Speaking to that as well as Vitalcan, I think the awesome thing about it is that these are some very wide, well-known merchant retailers in this case that's going to bring a ton of traffic to the Morpheus network. And again, I think this is kind of the exact target market of what you guys are going for, covering a wide range of different products and services. And one thing I wanted to talk about, I know one thing that you and I have gotten really interested in, we talked a bit about beforehand for the interview, was talking about this kind of improvement into healthcare in this case in regards to tracking medical supplies, especially the PPE that a lot of the doctors are relying on right now that are using, for example, like face masks or ventilators, and making sure that these products are certified and have gone through the proper channels. So I want to go ahead and give you some time to talk about how Morpheus is kind of taking the lead in really a really interesting time where something like Morpheus could be very valuable for the medical system.
Yeah, that's interesting. It's funny you mentioned, well, not funny because nothing surrounding the pandemic was funny necessarily, but we actually brought on Dean Allen. He's our head of medical solutions with Morpheus Network. We're actually developing a system to do more specifically with the maintenance of DMEs prior to the pandemic, beginning. So we actually had a system in place to procure, to have them up to snuff and be able to put them on patients, to connect that to the patient onboarding system. And then the pandemic struck, and basically that was the issue, and why we had to flatten the curve, and the whole issue with supply chain, having these patients potentially coming in and overloading the healthcare system. And it's not even a case that the supplies aren't there; it's that there's no system in place to get the supplies to the hospitals based on the patient flow. So obviously having interconnected data from, let's say, a patient admission system to the actual maintenance system of the DMEs, the durable medical equipment, the ventilators, the beds. You can't just stick a dirty ventilator on a new patient. They have to be maintained as well. So all that has to be interconnected too. So really interesting. And then obviously the pandemic struck, and what we've been doing is offering our services when it comes to actual supply chain automation, getting the shipments themselves where people need them to go, offering those services for free just to help with the current situation, obviously. And we've had great success sourcing as well as helping with actually getting deliveries done as well. So it's been great to help out. There's a lot more work to be done. We're actually putting out the system as a part of the Florida Smart City as well, which is being created with the Florida Blockchain Association. So that's sort of something we're working on with a few different parties that have to come to the table. One of the big players with that as well is the onboarding system with IBM. So very excited about that, and moving ahead with trying to help out with the current healthcare system. And once again, it's great having Dean Allen on the team, the head of medical solutions, who's done this for a lot longer than I've had, obviously, within the healthcare industry itself. I feel like that's sort of our specialist on the team. You find somebody in a vertical who knows all about it, and then we can apply sort of our technology and our supply chain knowledge to that as well. So it's been a great relationship with Dean, and this system is quite impressive as well. So.
Yeah, just taking a step back and more of a business perspective. Yeah, and one thing that I've always liked about you and the team at Morpheus is it always seemed like you guys were prioritizing making sure to get other people from different industries involved, or people who had different focuses. And I think again he speaks to that in that regard with the new employment. But along with that, in the sense of the actual platform itself, I think what you guys are offering is something that's going to actually fix this broader issue with PPE. Because as you mentioned, it's not a matter of actually production in this case. The economy will produce to meet the demand. In that case, they'll produce the supply. It's a matter of the actual channels of getting it from point A to point B, and having the a proper platform where you're not going to be hitting errors in communication or missing certain areas or hitting edge case scenarios. So I think it's really exciting to see how you guys have continued to develop. Now, in that sense, right, we have this kind of healthcare focus that you guys have. You have new merchant partnerships in this case, where you guys are getting out to distribution centers and actually getting out to retail stores. I'm curious as well what's going to come forward here in the next couple of months. Like, what's something we can look forward to in the sense of what Morpheus Network is going? What's keeping you up at night?
You know what? With FCL specifically, besides all the other proposals we're putting out there, just working with a company like FCL in the first place gives us that reputation of, having a solution that works for a massive, food supplier. So we're having a lot of contact with tons of food suppliers all around the world, which is fantastic. But to be honest, with FCL themselves, there's so much work to be done. We're already discussing the next phase of implementation. They want to cover visibility. Like this document handling system is amazing, but they want to do visibility right from the farms to these suppliers, then to the FCL warehouses, and then out to these 2,000 retail locations as well. So those are all different phases. So as you can imagine, that's a whole lot of work. On top of that, I believe it's 66% of their shipments are cross-border, from the United States into Canada, and they're manually setting those up themselves right now. So again, that's another huge phase of implementation for Morpheus. These are all things we're discussing. So really, there's going to be a ton of work with FCL, and we'll give the community and obviously for yourself as well a lot of updates as we implement and put these systems into place. And really, I want to put a big thank you to the guys at FCL, to Ray and Mike specifically, and our team as well, to Noam and developers for putting through this first implementation, and already moving ahead with the next phases as well. So.
Absolutely, Dan. It's really exciting, man. I think, again, people don't take into account just so many things that you guys have to consider with different regulations when you're doing cross-border kind of trade or imports and exports, when you're dealing with the communication channels between all the different players that actually make it possible for a product to be developed, as you mentioned, from those early points, and tracking it from that point, but also taking it to the point where it's actually in a retail store where a consumer is going to actually purchase it. I mean, it's an incredible journey, man. And I got to say, it's amazing to see over these last few years, you guys have really brought on progress. You've been working every day at it. So for those of you as well, I just want to make it clear, if any of you are interested in keeping up with Dan after this interview and stuff, and just keeping up with what's going on at Morpheus, I highly recommend you check out Morpheus.network. That's their website where you can keep up to date with the project. From my knowledge, Dan, you guys have like a blog and resources and stuff that people can turn to. You get pretty frequent updates as well yourself, and just kind of keep people in the loop in regards to all the great things that you guys have been doing.
Yeah, most definitely. Yeah, the website constantly updated with our new clients, new partners, whoever it is. We'll keep people updated with that. And if they have any questions for me specifically, whether it's about FCL or VTELCAN or any other projects we have on the go, they can always email me directly. I love hearing out from people as well. So Dan at Morpheus.network, or even my co-founder Noam at Morpheus.network as well. We love hearing questions from people who are inquisitive about what we're up to. And yeah, we love what we do, Nick. So it's more about let's keep on moving ahead. Let's keep on finding more interesting projects, and as long as we enjoy it, obviously we're gonna keep on doing it. So.
Absolutely, Dan. Keep up the great work, man. It's definitely needed in this time. And again, I highly recommend all of you check out the website. Again, feel free to reach out to Dan if you'd like. And hopefully we'll have you back on here soon, Dan. I'm excited to hear where things go.
Yes, me as well, Nick. Always have a great time. And thanks again for having me on.
Absolutely, man. My pleasure.